combat the interest rates with underwriting conservatively and buying properties based on cash flow, based on what works, and know your business plan, know your exit strategy, work from the end in mind. And just the markets are always going to be the next crisis. So instead of waiting to buy real estate, just keep going, but just adjust your methodology.
Your network is your net worth. Come listen to some of the most successful people I know share invaluable knowledge, stories, and advice in real estate, business, and beyond. This is Weiss Advice. Whether you want to take your business or personal life to the next level, look no further. Welcome back to another episode of Weiss Advice. I'm your host, as always, Yona Weiss. Grateful and excited to be here today with another great guest. We got Josh Appelman. How you doing today?
Doing good, man. Doing good. How are you?
I'm doing wonderful. It's a good day to do a podcast, just like every day. It's a good day to do a podcast. You know, I feel like if I'm not podcasting one day, it's not a real day. I mean, obviously, besides the Sabbath, I have to take off time for that. But it's great to meet you. And speaking of podcasting, Josh and I were co-guests, I guess I would say, on the Diary of Apartment Investors, by our friend Brian Briscoe a couple weeks ago. And that was amazing. So we already had a great conversation on that podcast. If you haven't checked that out, we'll make sure to put a link in the show notes for that. But I'd love to just kind of continue that conversation where we left off. Before we do, Josh, I'd love for you to give our listeners a brief background and who you are, what you do, and what you're working on.
Yeah, for sure. So now we're full-time real estate professionals. We'd like to think we are. And that means we're actively underwriting new deals and come across the desk daily. We're managing our own properties. We're vertically integrated as far as renovation. So currently it's full-time, but I certainly don't come from real estate as far as investing. I built a company starting in 2009 and then built a company off of flooring installations. So started that company from zero, and then over the course of 9 years, grew it to $10.5 million per year. 52 employees, 200 plus contractors out every day installing flooring, 9 different locations throughout the state of Kentucky, West Virginia, and Cincinnati. Inc. 500, 5,000 list 5 years in a row, Big 50, multiple awards. So it was very, very cool time in my life. I was late 20s, early 30s, and then essentially that business changed drastically as the corporate world changes. You've got different leadership that might go in place, and they've got different ideas, different relationships, and it can adversely affect certain businesses if you're not within their box at that time. So that pointed me towards real estate. I wanted to go into something that essentially I couldn't have a light switch turned off. I was in control of how much effort I put in is how much I'm going to get back. And real estate offers that.
Right. That's amazing that even within the business that you were doing, the flooring business, you didn't have control. I mean, there's so many outside factors, whereas, being an entrepreneur in real estate, you can really control a lot. I mean, obviously there's certain things that are out of everyone's control, market shifts and market changes, but for the most part, there's a lot that's more in control. And you got your start in single families, and then you kind of scaled up to multifamily. And if I recall from our conversation, all doing so kind of on your own, meaning not bringing on investors or anything like that.
Well, and I didn't even start with single family. I started with a 33-unit apartment complex. So it even gets odder, I'm going to say, because really I didn't understand real estate investing at all. I didn't understand the language. What makes a real estate an investment? And what does all this stuff mean? A DSCR, debt service coverage ratio. What is that? What is cap rate? What is internal rate of return? What are these things? So you've got to go out there and you've got to grab knowledge. So where do you get knowledge? You get it from books. You get it from podcasts like this podcast. You get it from YouTube channels. But then you still have to connect all the dots. What do all these things mean and how do they correlate with each other? So it's, as you start getting knowledge, you'll say, all right, well, DSCR means, that's what the bank looks at for how much the property can pay towards the debt payment, 1.25% or 1.3. It's how much can a property afford? And then that goes into interest rates, just all this stuff. It's like, how do you start learning this and get it to where you can go out and get an apartment complex confidently, or, a single family rental and turn into something bigger. So it was really, really tough at the beginning, but all my free time went towards learning real estate, learning about it. How do I figure this out and get there?
Well, how did you get there? I mean, did you have mentors at the time, or were you just like kind of taking courses, or and listen to podcasts? Like what practically were you doing? Because I know that's where a lot of people who listen to this podcast, they're at that same stage.
Yeah.
You know, they're thinking about, okay, can I do my first deal as a 33 unit, apartment building? Like, what does that take?
Yeah, and I really didn't know where to go, where to turn to. So I signed up for like an online realtor license course. And I never wanted to be a realtor, but I wanted to learn the professional side of real estate. So I signed up for a course, and at night times I was going through all of this studying, and then it was all digital, all on the internet. But I was going through the actual steps to get a real estate license. And that got me to a point, but it still wasn't what I was looking for. I'm looking for what is real estate investing. And then you can go on, you can search for gurus online, YouTube channels, and then it's kind of like you go down the rabbit path, and then you start just keep learning, and then you seek mentorships, and then a mentor can get you to the next level. But you're kind of like gritting and grinding your way to get information. And I think that podcasts like this is like an essential way of connecting the dots. Is you're getting someone who's started from zero and now buying apartment complexes, but what is the path? What is the path to get there?
Yeah, absolutely. And you yourself have a podcast as well. I mean, if I didn't know any better, I'd assume so just from the microphone you got there. But I do know it's called Real Estate Hustlers. And, that's a podcast where you're also just, they're sharing insights about, interviewing people who are experts in their industry, in their, their craft within real estate, and a way to get better and better.
Yeah, absolutely. And bringing on guests such as yourself, industry experts that can share knowledge. You take one gold nugget away from this podcast, that can change the trajectory of where you're heading. Just takes one piece of information. And that's another thing, getting into the room of other real estate investors, whether it's a local meetup, an event, just getting around the crowd. You don't have to even say anything, just shake hands, take cards, and listen to other people and how they're talking. Because that's the conversations that you want to be in. It's going to force you to level up to a different level. And just remember, somebody is always ahead of you, no matter what stage you're in real estate. Somebody else is already ahead of you, but somebody else is also looking at where you're at to get to that point as well. So it's, whether you've got $50 billion of assets under management or 200,000, somebody's always one step ahead, and you can use that as guidance. As this person is already there, so that's proof that it can be done.
Yeah, there's so much, depth in that when you start digging in, when you start listening, when you start getting feedback, and just trying it out. I mean, I think jumping in is the first step, and you did so with 33 units, not looking back, haven't looked back since. I think it's amazing.
And getting in and doing it confidently, because there's a lot of people that do unfortunately buy the wrong deals, and you do make money on the buy. And I say that by buying it right. So if the after renovation value is $200,000, that's after you put money into renovations. You want to buy it to where you have equity still in the deal to be able to refinance and keep it, or if it doesn't sell. So you truly have to buy right and not buy in a deal where it's going to put you against the corner to where you have to fire sale it because you don't have any equity and you bought it at too high of a basis. And to get that level of information, you have to educate yourself on what does a good deal look like. What are the area comps? What are the rents? How far can I push this when I'm done? What is the buy-in basis versus the after renovation basis?
Yeah. What would you say for someone who's kind of starting out, you think it's a good idea to start like you did with a bigger deal? Because I know it's hard to do, especially if you don't have the capital starting out. I mean, you had the capital that you had essentially from leaving that previous business to invest, but not a lot of people have that much, capital starting out. Like, what would you say is the first, best first step?
Well, and my first deal was, I knew it was a good deal, and it was a safe deal to buy in because I was buying it right. And I knew that. But for someone to go out and start getting into the real estate investing, start small, start with even a single family, or what's better is start with a duplex and house hack or a quad. That way you've got at least one person that's help offset the mortgage payment, or three people in a quad. Start small and then start learning the transaction process between getting it under contract, due diligence, negotiation, closing, and then you're actually going into management. And then might be managing your renovations or go into managing three other tenants that live in your quad. But you can get the entire experience just off 4 units or off 2 units that you would off of, say, 33 units. The 33 units, I can tell you what helped me also get in there was having a property manager. I could use a property manager's experience to help me qualify to get on to buy the 33 units. Because the bank, I had zero experience in buying properties or even property management in general, but I brought a property manager in who did have a lot of experience. And then just
Yeah.
make sure you're watching every move they make and learn and just grow.
Right. That's what I was going to ask. I mean, banks will not give you a loan if you don't have the experience. It doesn't matter if you have money.
Right.
If you don't have experience, they won't give you a loan. So, I mean, you have to partner with someone in your first deal if you do want to get financing, right? If,
Right.
do your first deals with creative financing and all that kind of stuff. We had some guys on the show about a year ago, right? Cody Davis and Christian Osgood. They're got, $40 million in real estate deals and have never taken a bank loan. And so there are ways to do it, right? And you can scale, but it takes a little more work, finesse, I guess, maybe negotiating skills, but finding the right deals, you can make it happen.
Well, that and mentorship. Mentors
Right.
can guide you into a path that's least resistant to where you're not just cutting your teeth along every way. Well, I'm not going to do that again. Not going to do that again. Not going because those not going to do that again costs a lot of money. So if you have a mentor that's already been there and done that, and he's not going to do it again, he's not going to let you do it. He shouldn't if he's a good mentor. So having a mentorship is your vessel to get to the next levels too. They've already been there. They've proven the path. So it's the smartest, most effective, and fastest way to get to where you're going.
For sure. Did you ever have any deals that were just like, I mean, this is a horrible deal, or, there are lessons that we learn. There's never something, I'm a big proponent of someone that there aren't failures per se. There are, people come across bad deals. It does happen, but I'd love to hear, a lesson of some kind that you learned from a deal that didn't go exactly the way you wanted it to go.
Yeah, and I think so my company, we still do a ton of renovations. We have project managers to stay busy, crews to keep busy. So we want to keep our crews busy because they're going to be there for the bigger property. So if we have consistent work, we keep good crews, keep everything going. We got full staff. So we're constantly having deals that don't work out like we want them to on paper. And I say that because the renovations take longer than we first anticipated. We get into unknowns, not necessarily apartments, but we do also have a side of the company that does smaller properties as well. Just keep things going. We like to buy right as well, but you're getting into plumbing, you're getting into older wiring, you're getting into things that are unknown behind the wall. And it's just you're working through those issues on a daily basis. And that's entrepreneurship and being a business owner. You're managing issues and managing problems, and you keep getting better. Your systems should be tweaked and they should be evolving as a business. But lessons learned or bad deals, we haven't had a deal, I'm going to say, that's just been a complete just bust, thank God. And I think it goes back to educating yourself and what deals look good versus look bad. We get inundated with deals in our inbox, and you're going to pass 99% of the deals because they just don't make any sense, or they're not right for us. They don't fit for our purpose and what we're going after. But it's just knowing what we're after and having clarity.
It's important to have, obviously you have a team, you're keeping them busy, you're doing work. There are things you learn along the way, but I think having your experience that you had as a, project manager, doing things in your previous business allowed you to kind of transfer some of those skills to building the current company that you've done. I mean, are there some things that you find that were like totally not transferable and stuff that you just need to learn brand new?
I will say this, you just made a key point. My background has enabled us to not have those deals that are nightmare deals. If I didn't have a construction background and in an industry dealing with vendors and subcontractors and project managers, if I had none of that and I was going out to start from scratch, I would probably have a tougher road ahead because I wouldn't know what bad looks like, say behind the walls, or what vendors to vet, how to deal with subcontractors agreements, and even holding contractors accountable. There is a very ugly side to all of that. The construction industry in general, if you're going into it, you need to know how to manage these vendors and the renovations and procuring the labor and material effectively. Because if you're operating off of a budget, you do need to go out there and procure material a different way. We've got national pricing set up with national vendors so that we can get material at a better rate than most. So that helps. We're obviously this is what we do. It's our industry. So there's different things that we do have an advantage over for sure.
Yeah. there are things that we can learn, in a new business. There's always going to be a learning curve, but having that background in construction, dealing with those vendors and understanding where they're coming from so that you can accommodate the best way, I think that's a huge advantage over other people.
And that goes into partnership though as well. That's where partnership comes in. So if somebody wants to get in real estate, they say, well, Josh has got the experience. They can partner with me and I can hedge them against the painful side of learning.
And coming from, and really what I want to get into here is you built companies that were in, Fortune 500, Fortune, 5,000. It's not an easy thing to do, right? Meaning, what are some of the things? And you don't see a lot of like the syndicators out there going down that path, and building companies. But I've seen many of the successful real estate investors that kind of started out small and are growing have been doing so by building out a company and building out the systems and hiring right. What was it like, when you were starting out, like hiring? Obviously, you had the property manager who came in, but what was your first hire that really kind of set you in the right direction?
Well, so this has evolved. It's not something that we just started out. It's evolved. It was not here out of the gates. And my other business that we built, it was repurposing the staff into the direction that we wanted to take. So it wasn't hiring brand new people. We had a lot of people already in place, and then this is the direction we're going to go. And then obviously we've made hires up to this point, and then we've also had people that have left or we let go. And that's employment. That's being a business owner. People are going to come and go, and it's something you got to deal with. You have to hopefully make the right hires. It doesn't always happen. Your alignments of interest aren't always there, but people can certainly propel a company forward. Those are your pillars. And if you have got alignment of interest and your goals are lined up, you can take that very far. My other company, that was when we had 9 locations going, I had to rely on people in 9 separate locations to stand the company up and make sure that they showed up every day and instill the core values of the company, as well as contractors that are representing our company out in the field in front of the customers, making sure that they're dressed professionally. They have the badges on, the background check. They're giving the professional feeling of everything it takes. And that can be very difficult, especially when you're scaling as fast as we did. There was a lot of growth pains, but at the same time, it's fun. It was great. It was fast paced.
Right now, your business is the apartment complexes and self-storage. They're mainly focused in Ohio. And you have like specific markets that you're in?
So we're in a tri-state area. So Ohio, Kentucky, and Indiana. I'm out of northern Kentucky myself. We're a mile away from Cincinnati. So we're right over the river.
Yeah.
We've got properties in all 3 states.
I was in Cincinnati last year for a conference, and I was like, first time ever in Cincinnati. I was like driving to the airport. I was like, see the sign, welcome to Kentucky. I'm like, wait a second.
Yeah.
I thought I was in a different state. And I'm going to the airport, in Cincinnati Airport, which is in Kentucky, or going over the bridge to get there. So that was fascinating. But you're local. I mean, what are you doing, in terms of, and I'm very curious about this, in terms of building a local presence, in terms of being involved in the community is really what I'm getting at, because I found so many people have increased their, business chances through the networking, through just being involved with the local businesses.
Yeah, it's getting the word out. It's showing up to local meetups, being a part of the community. And every city has got their own communities where you can get involved and outreach. It becomes very small when you become niche. There's very few people when you niche down exactly where you want to go. Like multifamily investors in northern Kentucky is very niche. And you learn who those people are as you learn where you want to go. If you're doing house flipping, and you niche down to exactly what type of house flipping you're going to do, you're going to know exactly who else is out there doing it. You become essentially friends with these people, and there's a common respect there. But community outreach, you're essentially rebuilding communities. What we do, we're buying an apartment complex, and our value add strategy is to renovate each unit, interior and exterior, whether it's new paint, new lighting, just a refresh, and you're rebuilding community by making it a better place for people to live and to grow their families.
Yeah. And it shows. I mean, little by little, people get to know you as, okay, this is an apartment complex that I want to work in, that I want to stay at. This is a place, this is a business owner in the community that is making a difference. It's not just, a lot of times you have people from out of state or out of town or coming in, just trying to get quick returns and not care as much about the local.
Yeah. Yeah, that's it. That's exactly it.
Yeah, it makes a huge difference. Have you found anything going on with Cincinnati in terms of or in the other markets that you're in terms of local governments that have either helped or hindered your growth?
We're in landlord-friendly states for the most part.
Right.
And I say that because there's other states that it is very, very difficult to operate as a landlord. And then you've got places that even do rent restrictions where you literally can't operate. You can't, there's no way of making the project a success, which ultimately could be is adversely affecting affordability and rents. But for the most part, there's a ton of support in the local communities where we're at, as far as even grants to help rebuild communities, going after tax abatements, and you can take advantage of opportunity zones. There's a township that I'm working with that their property taxes are much higher than the surrounding areas. So if we're investing into their community, there's got to be a balance point of both parties where we can say, hey, we're reinvesting, but we need to offset some of these, we need to offset some taxes here. We got to make it make sense on both sides. But you can do outreach and get involved and reach out to the other side and tell them what you're doing.
So true. That's great advice over there. Josh, there's a lot of talk right now. We're in the middle of 2023 about the markets. It's very difficult to get loans, very hard to, or get loans that, not difficult to get loans, but get difficult to find loans that, properties that make sense with the current financing rates. That's what my thought was. Okay, I got it out, right? The rates are high and it's very difficult to find deals that pencil. Are you finding the same thing, or are you able to still find deals with either creative financing or just deals that make sense regardless of the high interest rates?
Yeah, we'll underwrite for the deal to make sense, and then we'll put an offer that makes sense for us to buy it. I would say keep making offers based on what works for you and where you can take the property. And there's something called hanging around the rim. And what that means is that if the ball essentially bounces in but bounces out, you have a chance to catch it. It means if it goes under contract and it fails and you put an offer in, you might have an opportunity to buy that property if it falls out of contract or something doesn't work, or the seller finally comes to the realization that their price might not work for any buyer. So hanging around and putting an offer in and seeing if it works out or if it doesn't. I say combat the interest rates with underwriting conservatively and buying properties based on cash flow, based on what works. And know your business plan, know your exit strategy, work from the end in mind. And just the markets are always going to be it seems like the next crisis. So instead of waiting to buy real estate, just keep going, but just adjust your methodology.
Right. They say buy real estate and wait, right? Don't wait to buy real estate. Buy real estate and wait, meaning wait for it to go up in value. And that's just essentially what will happen in many cases. Obviously, there are a lot of factors that go into value. You're putting your value at, you're really renovating the properties, increasing rents. That's a huge factor. But doing it, and figuring out how to find the deals with the conservative underwriting. And like you said, you're looking at 90% of the deals you look at aren't going to pencil. They're not going to work. That just means, what does that mean? You mean you have to spend the time looking at 100 deals if you want one. I mean, that's simply what it means. So if you don't make the time to find the time to underwrite deals, and it may be one a day, maybe two a day, but just make it happen.
I'll tell you, most people will look at a deal and they'll say this doesn't work and move on. And if you would maybe take 5 more minutes, write it in LOI, reasons why this price works, and send that in, that's the difference maker. People give up right when it doesn't work for them. Instead, take it one step further and submit a price that does work and give reasons why. Brokers look for feedback. They put out guidance, but if they get the investor's perspective of why it works at this price, it makes them think maybe we need to adjust pricing guidance because this makes a little bit more sense. So just take maybe an extra step, and then that could be your funnel to get more deals.
Yeah. And brokers are notorious for putting in the pro forma and trying to sell the property based on pro forma of what it will operate under in 3 months or 6 months if you do the following steps. But you need to buy the property that it makes sense from day one, not based on what it might be. Right? You can't buy based on speculation.
Yep, 100%. Absolutely.
Well, Josh, I want to transition to what we call now the final 4. These are 4 questions I asked all my guests. First one for you is, what is the worst job that you ever had?
And the worst job that I had, I think it was, I'm going to say back in high school, got a warehouse job, which nothing against warehouse jobs, but it was a pick pack, and it was assembly line. Essentially, you go out, you pick a product off the shelf, you put it on a cart, you scan it. And I say that was the worst job, and nothing against warehouse jobs, because I don't think there was any sunlight. There definitely was no sunlight in that building. So it was tough. It wasn't for me. It didn't work out. And here we are today. It's like worked out, I guess.
Light and day, right? No, it definitely, those early jobs sometimes give us a little bit of a spark under us to push them in a different direction. So
yeah,
it makes sense. Second question, what's a book you've read that's given you a paradigm shift?
there's plenty of books recently that I've read that, just I'm after the one nugget that's going to give me that push forward of what I'm looking for, but everyone's at different levels. I would say for the listeners, Rich Dad Poor Dad, I think resonates with the most people. If you haven't read it, you need to read it because there's something in that book that just is a trigger of looking at things a little different. For instance, assets and liabilities. An asset puts money in your pocket, liability takes money out of your pocket. My kids know this. I've taught my kids this. And if you ask my kids what an asset is, they'll tell you. They'll tell you that their toy is a liability unless they can sell it. And I want them to know that at their age because it makes them, they'll carry that knowledge for the rest of their life.
Yeah.
But I would say that book would be a huge paradigm shift and will get you thinking a little different about how you spend your money.
Absolutely. It's important to learn those concepts at a young age and they're ingrained in you. And that's the thing with the Rich Dad Poor Dad in the book. He tells a story like he learned these concepts at a young age and he was able to do what he did and accomplish what he did based on that, ingrained at that young age of those concepts that he got from the Rich Dad. Third question, what's a skill or talent that you would like to learn?
Yeah. So I'm a big believer in skill stacking. So what does that mean? How can you build skills to where they stack on top of each other? And then ultimately each skill is complementing off of another skill. That goes into even capital raising. Capital raising is a skill, and it's a skill that honestly I have not learned at all, but it's a skill set that is an art, going out there and introducing yourself to the right people, being someone valuable to go to that has inside deals that no one else sees. But I would say capital raising would be a skill that I definitely need to take time to learn and hire a mentor to learn. I say hire a mentor because they get you to that. They get you there. They teach you exactly the steps to take. Underwriting has been a huge skill that I've learned. Underwriting, market analysis, those all go into real estate and find right deals. But skill stacking is huge.
I never heard it put like that before, but skill stacking, I mean, it makes sense. Doing one thing kind of builds on the next. It's not just random things. There's a way to, some people are smart enough or creative enough that they can just learn a lot of random things and have them kind of fit together. But having one thing on top of the next really makes a lot more sense.
Yeah. Yeah. Even marketing's huge. And it really being able to market yourself out there. And it's like I was saying, I'm a businessman. I'm a businessman and not necessarily a business. There's two meanings to that. So it's you being your own business and being out there and marketing yourself the way you feel fit. Marketing is a huge skill in itself, and it can help you or it can make you or break you, really, or you rely on somebody else to do it.
100%. It's a really great way of looking at it. Fourth and final question, Josh, what does success mean to you?
I think my wife asks me that all the time because I'm never satisfied and I'm happy, but it's like you're constantly after what the next is. And I honestly don't know what success. You build it up, you keep going. Yeah. Mm-hmm. There's the adage, do what you want, when you want, how you want, where you want. And I think once you get there, and that's what you're telling yourself today, what does it look then? It's like you're constantly searching for the next level of success. But I like coming in every day in the office and being with the staff, talking business and working out the difficult days, the challenges, and fun. Yeah.
There you go. That's a great perspective. And that's the way to do it, right? Keep that right positive perspective in mind. And, they say like you never work a day in your life, right? It's really about just enjoying yourself.
Yeah.
Making sure everyone else is as well. Everyone's on the same wavelength. That will help have a continued growing company and business.
Totally agree.
Awesome. Well, Josh, where can our listeners find you or reach out to you if they want?
Yeah, I'm on social media. With me, Josh Appelman. It's Appelman. Email me, Josh@Appelman, Appelman group.com. Look me up on my podcast, Real Estate Hustlers. And I'm out there just doing the do.
Marketing yourself, as you said, right? Getting people to know who you are. I will make sure to put all that in the show notes if anyone wants to check out. Please do. I highly encourage everyone who's listening to the podcast. If you don't know, we have some awesome show notes. Just click whatever you're looking, more information or whatever the 3 dots, wherever you're listening to this podcast, and you can find out all that information there as well as much more. So I appreciate you, Josh, for coming on the show today. Really enjoyed spending the time.
Yep. Yeah. And I appreciate it as well. We'll talk soon.
Likewise. And to our listeners, thank you guys for listening all the way to the end once again. And remember, until next time, the best advice comes only when you ask. Real quick, I have one question for you. Did you like this episode? If you did, I want to ask you a huge favor. See, the biggest thing that helps this podcast grow and that will spread this message to the whole world is that if you leave a review, a rating, and subscribe to the podcast. What that does is it basically tells the platforms that this podcast is out on is that you like my stuff and I'm doing something right. So take a few seconds out of your day, hit that subscribe button, leave a rating or review. I would be extremely grateful. Also, I want to hear from you guys. So I want to hear some feedback. If you have any questions for future episodes, please find me on LinkedIn, send me a DM, a connection request, Yona Weiss, and I'd love to hear from you.